Hi, welcome to the video day. We are on the 5th of October. It's Wednesday. In today's video, we're going to be giving our outlook for several USD pairs. We'll go over to the charts in just a moment. Now, in terms of the markets, we have a lot of volatility and big trends. And one big trend that has been persistent this year is the USD going up against most other currencies. Now, it has had a pullback recently. We believe the pullback is a buying opportunity. Now, in terms of this video as well, I want to go through some tips in terms of getting in to big trends with the best risk reward and holding them for longer without getting spiked out by volatility. Well, we've got a lot of great trends around. You do have a lot of volatility and price spikes. A lot of traders find they get into a trend, then they get taken out, and the trend carries on without them. So hopefully the tips will help you minimize that problem. Now, in terms of the opportunities, we're going to go over them just a moment. Before we do so, if you want to learn all our trading techniques, check out our trading strategy, as well as our daily technical and sentiment analysis of 14 FX pairs. All you need to do, go to the link beneath this video and you get live access to our member center. Now, live access is for a limited period now because we're going to annual membership, which will be the same as live access. So you can check that out on the link beneath this video. You can also join our free Forex education or mailing list. Check out our Facebook page, and finally join our Facebook group of traders. Right, let's go over and take a look at the opportunities. All right, Tron USD CAD. Now this is a monthly chart just to see the big picture before we shift over to the daily chart to look at levels of entry, stop and target. Now, in terms of, just before I discuss this trade setup, obviously I'm doing my weekly forecast now. I'll be doing one every week on this channel. I haven't done one for a couple of months, but I have done a weekly forecast on our sister channel, which is FX Info Online. I will make reference to some things I said in the videos on that channel as we go through the trade setups. If you want to go over and take a look at it and subscribe to it, the link is beneath this video. Now, in terms of USD CAD, we've been generally bullish all year. We particularly became bullish when we got above the 130 level. We recently bought at 130.30. We got up to 138. Then we got stopped out on this red. So we're looking to get back in long. But where could we go? My view is we could go up to 140. So these candles here and the three candles on the left, and then possibly overshoot to this tail and this tail, so up to 145. So basically that's 800 more pips on the upside, despite what has been a really nice rally. I think you've got really big support at 135. Okay, now in terms of making a projection of 800 pips on the upside, it is a projection you can only do by making a judgment in relation to the fundamentals and sentiment. So I want to quickly just summarize the bullish dollar fundamentals in our view. It'll just take a few minutes. Why we're so bullish of the USD against the CAD, and also just generally, if you're familiar with our bullish stance, you can just skip forward to the trade setups. Right, let's do a quick summary. Right, just on the first chart I want to look at, which is called the dollar smile. I've shown it in quite a few videos recently. It's a simple chart, but just shows you when the USD is going to appreciate. Now, in terms of when does it appreciate, basically when you get a US recession or a synchronized global slowdown. US is not in recession yet. There's a lot of debate about whether it will go into recession. Personally, I think it might avoid it, but we've certainly got a synchronized global slowdown. You can see all the major economies around the world slowing up: China, Eurozone, India, Taiwan, wherever you look. Okay, we could, and I think we're going to get a global recession. That's just so bullish for the USD. Now, the reason it's bullish for the USD is due to the dollar being the funding currency of the global economy. 80% of loans in the global economy are granted in USD. But if you're granting a lot of loans, what do? You sell USD and buy another currency. Obviously, when you get a slow up, not so many loans or dollars go into circulation. Also, banks call in loans and credit lines. Okay, so that's a really big bullish fundamental. Obviously, we've got a hawkish Fed. So the Fed are hiking interest rates. So it's got a good yield on it, the USD. And a lot of people think that the Fed are going to turn dovish. We made reference to this in videos for a good while. They are hawkish and they're going to hike rates higher and hold them higher for longer than the market expects. That's another bullish fundamental. And of course, you have risk off. You've seen selling in the stock market. Okay, it's bounced recently, but that looks like it's got a long way to go on the downside, and numerous geopolitical problems around the world: Russia, Ukraine, China, Taiwan. In terms of the global economy, I cannot remember it being in a worse state. Okay, it's a really bad situation. And in terms of this chart here, it shows you how bad things are. It's the ISM Manufacturing V, the 30-year mortgage rate. You don't need to know how this works, but basically this red line plunging, the blue ISM line will catch up. It's looking very serious in the global economy. A recession, I think, is going to come. If I look at another forward-looking indicator, which I got from World Economics, which is the Sales Manager Index, the global economy is in recession. It's below the 50 level, which is contraction. Okay, so there's going to be no turnaround in the global economy anytime soon, which is bullish for the USD. So they're really big fundamentals supporting the dollar going higher. I just want to show you one more chart. Okay, the dollar's had a bit of a correction recently, so this line has come down since I posted the chart. But look at large speculative funds. These are hedge funds. How long they were the dollar when they came in to the new year. Despite the dollar going up all year, they basically shed longs, and they've shed more longs recently or bought other currencies as the USD corrected. That will now end. I think the dollar's coming into serious support levels, and the dollar for us is a really good risk reward buy. So let's go and take a look at the first pair, which is going to be USD CAD. Right, we're on the USD CAD daily chart. This is a chart I drew earlier, our member centre. Now, for anyone new to our videos, we do not do complicated technical analysis. We can keep it nice and simple because we've already got a view from the sentiment and fundamentals of which way we want to trade. So it's a simple support and resistance with volatility indicator, Bollinger Bands, and a couple of momentum indicators as backup. And also in terms of when we're doing our membership or our member center analysis, we always give exact levels of entry, stop and target, and we do it in advance. There's no market orders, and we only look at price action twice a day, once in the morning when I did this chart and once in the evening, which we're coming into now, where I will look and see if we need to make any changes. And in this pair, we do. Okay, now if we think back to the monthly chart, we're saying 135 should be support. That's first level, and we've pushed off it. We made a double bottom. Never put your stop right behind the obvious level of support. Go a little bit further back. We've gone 80 pips back, okay, at 134.20. Now what we wanted to do this morning, it's always a good way to enter trades, breaks of round numbers like 136. There's going to be a lot of order flow around the round number. So what we've done here is we give it 20 pips the other side. So hopefully if it gets 20 pips clear, it should continue to the upside. Okay, now if I look at the chart now, we have seen a nice bounce. It's basically 200 pips from the low. Now in terms of this one, if you wanted to come into it, how would you play it? My own view is go through 137, okay, so above the high, say 137.20, and then the round number should provide support. The second level back is going to be these couple of bodies here. You've got another body there and a tail, okay? So you'd want to be something like 135.70 back from the 136 level. This support level is a round number. You could give it a little bit of a wider stop if you wished. I'm probably going to bring our stop up if we break 137.20 to behind these bodies. So 135.70. Okay, so back from the 136 level. Now, in terms of Canadian dollar, it's a commodity currency. They always suffer when you get a global recession or global slow up because commodity prices go down. Okay, so yeah, this one looking good. Next one I want to look at is AUD USD. Now, in terms of AUD USD, we've held this for a long time, down from 70, 90. So literally, we were lucky. We got the turn. And you can see as we come down, you had a couple of bounces and so forth, but it's a really nice downtrend, okay? Our stop at 65.50 to lock a profit, okay? We almost got hit on stop there. And this morning, we were moving away from the 65 level, okay? Where are we tonight? Actually, before I show you where we are tonight, I just want to show you another chart. Sorry, it's the wrong one. This chart here, it's the US dollar against the Chinese yuan. It's a monthly chart, and you can see a big rise in the dollar. Now, if the dollar goes up strongly on the yuan, then it normally goes up strongly on the AUD. The yuan and the AUD are correlated. Obviously, Australia's biggest trading partner is China. If the yuan is weakening, that shows things are not going well in China and impacts on the Aussies. That gave us backup to hold this big move to the downside. Now, where are we tonight? Let's have a look. In terms of this one, right, in terms of this pair, we were lucky with our entry, just managed to come off the 71 level, but since we got in, it's just been a nice move to the downside, well over 600 pips, and there's still more downside to come. You can see my target 60. I'm actually going to extend that to 55 longer term. Okay, now in terms of in strong trends, you always want to keep your stop a little bit back. One technique you can use is look at the 20-day moving average. If you've got a strong trend, it'll very often, if you get rallies, fade into the 20. Okay, you get above it there and through it briefly and then down. Okay, 20-day moving average is very, very useful in trend following. In terms of our position at the moment, we've got a stop tight. You can see it's 65.50. We've got a decent profit. If we get stopped out, so be it. We don't think it's going to run too far to the upside. We could sell weakness into the 66 level. I'll go through how you could sell it on a move higher in a moment when I go to where the price action is right now. But what about if we don't rally? Okay, now if we don't rally, let me go to the chart right now. Not too much different from earlier on, tail down towards the 64 level. This is the key support level, okay? The two bodies, if we can get through 63.80, you can then look for follow through to the downside. Stop could be 65.50, just back from the 65 level. If we were stopped out, we would look for the 60 level, a round number, and the 20-day moving average for the rally to fail, okay, and just trade weakness, okay. You could get a decent spike to the upside. It has been a good downtrend, but the big fundamentals are out and out bearish for the Aussie in our view, okay. So that one's going okay. Let's go to the next one. Could do Euro USD. Right, we're on Euro USD. Now, in terms of this one, we've generally been trading the short side over the last year. Recently, we did have a nice trade off this big red here. Really nice fall. Then we stopped ourselves out on the bounce. Then we tried to go short again a little bit too soon on this red. Got taken out on stop. But we run straight up to the 1 level. This is a huge level for institutional traders, a big psychological level. We just wanted to sell well clear of the level. We did 99.30. Now, I just think this is a bounce in a bear market. Looking for monthly support at 90. Obviously, we've got 96 in the way. But longer term, I think we could reach 90. Things are so bad in the zone. I just see this rally as a short squeeze. Okay, now just before I go and look at the price right now and how we might play it, I just want to go and show you some charts that show how bad it is in the zone, which I think the majority of forecasters are not seeing. Inflation 10%, okay? ECB raising rates to curb inflation. That won't work. Why? Because there's an energy crisis, okay? So putting rates up isn't going to solve the energy crisis. Now, in terms of here, we've got US blue line, Europe grey line, total energy expenditure in current prices percentage of GDP. Eurozone is spending 12%, double the US. This crisis is not getting solved in the short term. So that's going to be a real bearish fundamental going forward for the zone. Okay, US is much more insulated from rising energy costs. Okay, in terms of a lot of forecasters, Eurozone will not go into recession. That's the view. Eurozone PMIs are collapsing. This is a leading indicator. Retail, services, construction, and industry, they're all coming down. Some are below zero already. They'll all be below zero soon. That will basically confirm a recession. Consumer confidence has just plunged. So, consumer is gloomy again. That weighs to a recessionary picture. ECB hiking rates just going to kill the consumer even more, aren't they? Rather than bring down energy prices. I don't understand the ECB's logic. Zone really in bad trouble. And, you look at it also, there's a load of political problems as well with Italy having a government that's anti-EU now. Just not looking good for the zone. It's looking good for the USD, though. USD is going to push the euro lower. Now, in terms of the chart right now, nice red, but off the low of the day. How would you play this one? You can sell weakness back to the big power level, or wait for a break of the base of the blue candle, the big blue I'm highlighting here, through 98, say 97.80, and then go with a stop behind 99. I would put the stop somewhere like 99.80. Okay, plenty of downside potential. Okay, so you can sell the rally or sell a break lower. Where are we going to go next? British pound. British pound, basically energy crisis in the UK as well, and the government did tax cuts in a mini budget based upon the idea that will boost economic growth, and the market didn't like it, just sold the pound off really hard. Obviously, cutting taxes will raise inflation, and it's debatable whether it's going to boost economic growth. But the pound managed a big rally after the sell-off. The UK government actually had to, or the Bank of England had to intervene in the gilt market to stop borrowing costs going too high, because a lot of pension funds looked like they were going to go bust. The market took that as positive, and also the fact that the UK government will explain the logic of their fiscal package soon. It's going to be hard to explain the logic of what they're doing, but massive rally. We just wanted to sell through this level here. You can see it at the top, 113.70 today. Got a double top, and then you've got a second resistance there. What have we done tonight? Let's have a look. GBP USD. Come off okay. In terms of this one, if you wanted to play it, you've got the big double top here. Any rallies back to 114, look for them to fade and sell. Stop behind the double top and use the stop that we've got on our chart. I think that's far enough away. Or wait for a break of the next round number, 112. We go through 112, we should sell off down to 107. Where would you put the stop if you came in through 112? 20-day moving average, you'll be through that again. Okay, I'll pop it back behind these blue candles here, like something like 113.40, the two blue bodies, and that will give you a nice risk to reward. So it's looking okay tonight. We'll see what happens. Now let's go to my next chart, which is going to be NZD USD. All right, NZD, USD. Now, in terms of the NZD and AUD, they're very correlated. So we just did both trades together, treating them as one against the USD effectively. Now, similar setup. We got a nice entry through the 64 level, break the 20-day moving average, and then look, we only come back once to test it here. And then it's just to the downside. Really good profit in this one. How would you play this one? Now, in terms of this one, the stop is tight, 58.20, okay? So just behind the round number. I didn't bother putting it behind the 20-day moving average. If I'm stopped out, I could always get back in at 57.80. Because that'd be back through the round number, stop 59.40, which would be behind here. Now, what's happened in this one? We've touched 58, but can't get through the level. So it applies if we go through 58, just sell back through the round number, stop behind 59. You're looking for the 20-day moving average to hold the rally. Or if we don't go higher, I would, for fresh trades, come in through here. So 55.80, double bottom of the round number, just get it cleared, and then put your stop behind body here, tail, tail. Ignore that tail there. So I'm going to say something like 57.70. Long way to go on the downside in this one. I think we can go as low as 50. So that's longer term. So hopefully another 700 pips. Right, just a couple of minor USD pairs to finish up with. One that we've liked for a good few months. It's this one here. Sorry, I'm not there yet. It's USD ZAR. Now, in terms of the South African rand, it's an emerging market currency. They tend to be very, very volatile. This is a huge move up, and we've been focused on it. We've been stopped out a couple of times, but got the bulk of the move. Now, in terms of when we break above the 20-day moving average here, there we go through it. Okay, that did stop us out on the trade. Then we go up, and then recently we've come through it. So got stopped out of a trade the other day. Okay, or yesterday. See, we're sitting just on kind of what I would consider to be major support. These bodies here, tails here. Then you've got minor support here, bodies. Just going to give it a bit of room past the 20 and through the trend line. I'm looking for 19 or higher on the upside. Okay, so we'll see if we can break higher. Or let's have a look at what we're doing tonight. USD ZAR. Okay, so we've broken to the upside, so that's good. We're now looking for follow on to the upside. For me, if I wasn't in, I think it's a good level to come in now with the same stop as us. Okay, or you could have it a little bit closer, maybe clear of the tails. You've got the bodies to support there, and then you've got the bodies here as support, which basically line up with the two tails, if you can see that. I say, yeah, going to 19, okay? Could go even higher, actually. We shall see. So that's USD. Our last pair, USD SGD. Again, this one has been a good one in terms of the 20-day moving average. Break above it there. Back to test, but only a brief poke through. Acceleration away, and then a move back to just above the 20-day moving average. I would say just go through the next round number up. Clear that round number. We moved away from the 20-day moving average, got double trend line support. We're looking for 150, which is off the top of my computer screen. So, yeah, there's some pairs to look at. A lot of really good looking USD pairs. I've just picked out some of the favorites that I like at this moment in time. But when you're trading big trends, you don't need to watch price action much at all. Just always be putting your stop, one level back from the obvious, and you will get some really good moves. When you're coming in, come in. If you're buying, come in on strength. If you're selling, come in on weakness, and go through a level. Do not do market orders. Many people do market orders. It's impulsive. You should pick out a level. Okay, so that's my views on the USD and a few tips on trend following. So hope you found the video useful. That's the video for now. Thank you for watching. I'll be back with another forecast very shortly. Thank you again for watching.